Well, welcome once again to another hour of the Legislature Today radio show. We are at the Peacock Alley American Grill and Bar in downtown Bismarck, and going to kick off another hour of the show. Dale Wetzel, managing editor from Great Plains News, here to recap what happened in the Legislature today, plus some very special guests. Want to tell you also, speaking of the Peacock Alley American Grill and Bar, it's Teeny Tuesday. That means every Tuesday, actually, the award-winning martinis are 2 for $1, and all of their appetizers are $2 off. So that's every Tuesday, 5 to 10 p.m., right here at the Peacock Alley American Grill and Bar. And their appetizers are fabulous. They are really extraordinary. Great food at the Peacock. Come on down and enjoy. As I mentioned, we have some great guests that we're going to get to here momentarily. But first and foremost, let's introduce the managing editor for Great Plains News, Dale Wetzel, to recap what happened in the Legislature today. Dale, give us a little rundown.
Hello, Scott. Some things high and low happened at the Legislature today. Nothing really low, just a bit humorous. One of the things that was interesting about the House floor debate today, and you get this sort of thing during the legislative session, and it does help to lighten the mood. There was a bit of an argument about whether Highway 12 actually goes to the Yellowstone Park. There was an assertion made on the House floor. This was in the context of renaming the section of Highway 12 that's in North Dakota. There's about a 90-mile stretch in the southwest, whether it should be named the Yellowstone Trail. And so a discussion ensued of where does U.S. Highway 12 go? The gentleman who explained the bill said that it went to the Yellowstone Park, and not quite, but it was a bit of levity, and these are the sorts of things that happen during the session, and it's fun. In terms of hearings today, we dealt quite a bit with natural gas flaring. There's a great deal of natural gas. It's wasted in western North Dakota as part of oil production, and it's because there hasn't been a system built yet capable of collecting all of the natural gas that's produced along with the oil and taking it to a processing plant. And one of the solutions that's being proposed is to offer a tax exemption, a temporary tax exemption from the state production tax for natural gas if the operator who's producing the gas is able to use it by essentially bringing up a small processing plant about the size of a semi-trailer and putting it there and being able to capture the gas, use it to generate electricity, use it to make anhydrous ammonia. There are a number of things that can be done. Right now, this practice is of marginal profitability, and the tax exemption, the temporary tax exemption, would encourage this by making it essentially profitable to do. And it's good because a great deal of natural gas in North Dakota is being burned off and wasted, and it kind of offends the sensibilities that all of this is going up in smoke, along with a number of royalty payments that could be going to the mineral rights owners. In addition, there was an interesting hearing about autism spectrum disorder and ways that the state can provide services to children who have autism spectrum disorder, the ways that the State Department of Health can keep track of how many people have this diagnosis so that there's some realization of the extent of the problem, and also some training for school teachers, additional training to help them identify children with autism spectrum disorder, and also help them to manage them in their classes. That's pretty much what we had to do today, Scott. What we have tonight are two Republican legislators. We have Representative Mark Owens from Grand Forks, a Air Force veteran who retired up here, and he's from L.A., Lower Alabama, and that's why he sounds the way he does, and you'll know exactly what I mean when he starts talking. He's a very erudite man, but he has that southern accent, so I'm sure that he'll impress you. And we have Mr. Jim Schmidt, Representative Schmidt from southwestern North Dakota, represents a rural district, and he's an expert on credit unions and water, not in that order. And we also have Mr. Jeff Olson, Vice President for Advocacy, for the Credit Union Association of the Dakotas. Welcome, gentlemen.
Hey, hi, Dale. Thanks for having us back.
Thanks, Dale.
One correction, Dale. I'm from Huff, south of Mandan, and that's the ski capital of North Dakota.
The ski capital of North Dakota.
Ski capital of North Dakota.
Indeed it is.
Yeah. Yes, it is.
Well, gentlemen, what I understand that we're talking. Well, you gentlemen have experience with credit unions as customers, and I'd like you to discuss those.
Yeah, well, thanks, Dale. I started with the Spokane Federal Credit Union in 1982 when I was transferred out to Spokane. I still belong to that Spokane Federal Credit Union. And then when I had the opportunity to move to Alaska in 1992, I joined the Matanuska Valley Federal Credit Union in Wasilla.
What was your employment at this time?
I worked for U.S. Department of Agriculture.
And what did you do?
I was in charge of doing water resource activities in Alaska and also in the state of Washington for USDA.
And so you were joining credit unions in your various postings on your USDA job.
Right. And see, when I got to North Dakota, then I joined the Capital Credit Union as well. And so what I find really good for me is that that's member-owned, member-operated, and we take care of ourselves. And it provides, to me, a sense of security knowing I've got one membership with one vote, and I can volunteer my efforts to the credit union and let my feelings be known. And I find some value in that. And every one of those credit unions, all three that I've belonged to for a period of 30 years and down to about 10, has provided me with some simple options, which I didn't find in other places. So I enjoy that opportunity of that alternative.
What sort of options, simple options, are you referring to?
For example, a line of credit was really an easy thing. You could conduct it over the phone, and it's also over the internet nowadays with that. And in the early 80s, that was a real benefit. You just call them and say, I need some line of credit, especially for some of the businesses that I had. And that worked very easy, and it seemed to be more personable and easy access.
What sort of borrowing did you do at the credit union? I'm assuming you did some.
Yes, I did. For example, automobiles, and especially in Alaska, a lot of recreational vehicles and that sort of activity. We did a lot of skiing and that type of thing. And most of it was recreational, and so we never did borrow anything from real estate from that aspect. But most of it was recreational and cars and that sort of thing.
What? Did you think the interest rates were competitive, that the terms were competitive?
I thought there was, in some cases, they were lower.
Really?
They were actually lower, right? And some of those costs that are associated with loaning is actually lower in the credit union.
Did you run for the board ever, or were you ever director?
No, as a federal employee, I didn't want to get involved in that.
Did you even have that option as a federal employee?
I think it was there. It was, but I did a tremendous amount of traveling and so forth and so on, and so it was just easier for me not to do that, but depend upon those that were.
The first time you joined a credit union, why did you do it? Was it, close by, or did you have thoughts about the ownership structure of a credit union and how you preferred it to a bank, or how did that work?
It just seemed to be easier. It just seemed to be easier to get into it, and I like the idea of a lot of the people that I knew that were federal employees were part of that. And so I knew more individuals that were running it. And I say that since the membership is the running factor, then you actually basically knew the people that ran it.
Representative Owens, what was your first experience with a credit union?
As a member, over 30 years ago. And it was a matter of joining a credit union from the standpoint of generally, credit unions started out, particularly that far back in the late 60s, early 70s, as what's called select employer groups, meaning you had to be a member of a group to join a credit union. So you were constantly in a credit union with people that had basically the same values or working toward the same things you were working, and people you knew day in and day out.
Or had the same job.
Exactly.
In the same business.
Exactly.
And what was your business?
Well, I was just getting into the military back then, so I was bouncing around from post to post, and now that's been made even easier through these networks with debit cards, where I can go to these different networks anywhere in the United States, even overseas, and I don't pay a ATM fee or anything because the credit union is associated with that network, and they've waived the fee, and it's just like having a branch of that credit union wherever I'm at.
Was the big attraction for you initially that these were a group of people that you shared a common bond with?
Well, certainly that knowing that everybody, it wasn't just anyone that could join and possibly take out, well, let's say bad loans and then, harm the financial institution that you had your money in. But it was also the fact that, as Jim stated, that you're one of the owners. You have a voice. You have a single vote. It doesn't matter how much money you've got in there. You have a single vote.
What sort of borrowing did you do at the credit union, and how easy was it to do?
It was very simple, actually. Throughout the years, over the years, it's been, vehicles and vacations, and I think there was one house at one credit union once. But generally, real estate loan is somewhat restrictive depending on the size of the credit union, the bigger credit unions, because generally what they want to do is they want to hold the paper themselves rather than sell it on the secondary market so that you know who you're dealing with even with your mortgage loan.
Mm-hmm. And what were the size of the credit unions we're talking about here as far as you're concerned?
Well, one of them, one of my very first ones was, it's known as just Max now. It was Max Gunner Federal Credit Union, which actually used to be a federal charter, and that's a state chartered credit union. But that was close to $900 million. The last two that I've been a member of was merely $12 million, a very small credit union in South Dakota, and now $150 million here in North Dakota.
Jeff Olson, is $900 million, is that a big credit union?
That is a big credit union. Yeah. In North Dakota, the biggest credit union is about $4.5 million in assets. We do have one in South Dakota that is approaching that $1 billion mark, $1 billion mark. So that is very big for a credit union, yes.
Representative Owens, when you first joined the credit union, did you realize what the differences were with a bank? Because I guess I'm thinking about my own experience when I drove into town. Okay, here's a credit union, here's a bank, and frankly, I didn't know the differences between them. And if I'd gone in to open an account at one, I doubt that I would have asked about it. It would just been, okay, what is your checking fees? What are your minimums? How much do you charge for a car loan? I guess I wouldn't have thought about the ownership of it.
Well, the reason the ownership's important is because a credit union is very much like a co-op. Okay, all the members are the owners, and therefore it's nonprofit. So it can take that advantage of being a nonprofit, and it can mitigate that throughout the interest rates it pays and the interest rates it charges. It is not unusual that at the end of the year, the board of directors, who, by the way, are all voluntary and do not get paid, will declare a higher than normal dividend to return the profits back to its members. Now, it has a fiduciary responsibility to maintain some of that capital in what's called a capital reserve. And the regulations are still very much like in the banking industry. There's still regulations to protect the money. And that's what we have to do in the legislature. While we cannot affect here at the state legislature federal credit unions, we certainly watch over regulations for state chartered credit unions to make sure that we're not over-regulating them, but protecting the depositors.
Were you ever on a board of a credit union or ever want to run for one?
Well, I'm currently vice chairman of First Liberty Federal Credit Union Board of Directors.
And where is that located?
Well, that's in Grand Forks. It has offices in Grand Forks. It's headquartered out of Montana, Great Falls, Montana, where we've got 10 branches there scattered across 6 counties, and then the 2 branches here in Grand Forks, North Dakota.
As a person who was stationed at the Grand Forks Air Force Base, how did you end up at a Montana credit union? Well,
by the time I got here, they already were part of the Montana Credit Union. But what happened was, and this goes back throughout the history of credit unions, from the savings and loans debacles in the 80s, from the tech bubble crash in the 90s, and even the housing crash here after the turn of the century, no credit union has ever taken a taxpayer dollar to recover. Credit unions recover themselves. They protect themselves, and they turn around and they help out other credit unions. And this is what happened in Grand Forks. The Grand Forks, I understand, back in the 60s, only 10 or 12 years after it started, got into a little bit of trouble. So what happens is the National Credit Union Association goes to a healthy credit union and says, we'd like you to take over this credit union. It'll become part of your credit union. You'll absorb their problem loans, their debt and everything, but you'll save the depositors, you'll protect the people that are in it, and you'll grow it back up and you'll recover. And that's what's happened throughout the history of credit unions, and never a taxpayer dollar has bailed out a credit union.
Do you think that we would have had the debacle that we had 4 years ago, the financial meltdown and the problems that happened by the loaning of the loose mortgage lending, the packaging of mortgage loans, the selling of mortgage loans. Do you think we would have had that sort of difficulty if the banks that got into this problem had been organized like a credit union?
Well, and I want to be fair to banks now, because there's a lot of community banks out there that were not part of that problem, that are suffering under the same Frank Dodd regulations that all credit unions are suffering under, because it was painted with a broad brush across the entire banking industry to include credit unions, when it was a few large banks that got everybody in trouble and that caused this. So if they had been more regulated and more conservative in their approach than taking on these risky ones, these few big ones, they would have saved both community banks a lot of trouble and credit unions a lot of trouble.
Speaking of a lot of trouble, as a director of a credit union, what sort of impact have you seen from the new federal laws and regulations that have resulted from the financial meltdown of a few years back? Well,
the regulations have been overwhelming in some cases, and if you're a small credit union or a small community bank, in reality, they've really taken a beating on the number of people they need just to meet the requirements of the regulations, to perform all the paperwork, all the checks, everything. As you get into larger facilities, banks and credit unions, community type, they can handle a little bit better, but it's still onerous on all of them. All right, and we've only seen 25% of Frank Dodd so far. Wait till the other 75% hits.
It's coming.
Oh, boy. So we are talking right now with Representative Mark Owens, a Republican from Grand Forks, Representative Jim Schmidt, who represents the ski capital of North Dakota,
right,
Huff Hills in Morton County. He is from Mandan. And we have Jeff Olson, the Vice President for Advocacy for the Credit Union Association of the Dakotas. Gentlemen, Mr. Schmidt, do you, as a credit union customer, have you run into any consequences, if that's the term, from the increased regulation of credit unions?
I have not. But one of the things that I did enjoy about the credit union that I was involved with in Alaska is they had an arrangement with rental car companies. And you would go in for a pre-approved loan. And my son enjoyed it tremendously because that's where we got his car.
I'm sure if he got a car, he enjoyed it.
Oh yeah, he enjoyed it a lot. They made it real simple because the relationship that the credit union had with the rental car dealership worked very well for everybody. So it was a win-win for all three organizations.
Is there more relationship lending in a credit union? I mean, in other words, if you walk in the door, especially if you're a member of some standing, they say, well, we know this person, we know that this person can be trusted to repay their loan.
I think there is. At least in my experience there was, because you had a different relationship with those folks. And in most cases in a smaller community, you knew them from other actions, from other activities within that. So yeah, I did feel that, yes.
Because some friends of mine, well, a particular friend of mine is trying to get a mortgage, and it's like they look at your credit score, and if it's not a certain level, then it doesn't matter. It doesn't matter how old you are, what your earnings prospects are, what your job is. It's just, what your character is. It's just like, okay, this is your number, and if your number isn't high enough, you're kaput. And I wonder, why don't we just replace it with computers or something, if that's the sort of judgment that's going to be exercised.
If I could just add something too, Dale. First of all, I should preference why these two gentlemen are here as guests. We, as a professional trade association for the credit unions in the state, especially in an election year, we go on a road show and we go out and we reach out to legislators and candidates and we try to educate them on the difference of credit unions. And we learn a lot when we do that. And what we learn is we have some legislators out there that are really good credit union members and really good advocates for our cause. And so that's why these two gentlemen are here. In the last campaign cycle, these two gentlemen came to our events and we learned that they were strong credit union folks, and that's great to have in the legislature. Even we do a lot of lobbying with the banks. In fact, I was with the banks today on a couple of hearings, and so they understand the process. They understand, especially in Mark's position as a volunteer board member, the operational burdens that some of these regulations bring on. And the question you asked Representative Schmidt about, can you see that some of the regulations coming down to the consumer end? There's a lot of that's happening, and a lot of these things come back to you in fees. One of the things that came out of the Dodd-Frank bill was the interchange, where the federal government started mandating swipe card fees. And, there was a lot of misinformation about that. It's a complicated issue. The interchange, a lot of people thought that the Visa and MasterCard or somebody was paying those interchange fees, or it was the issuer, which would be a credit union or a bank. But in reality, it was both. It was the issuer, and it's the merchant. The merchant wanted the convenience of having electronic payment systems within their establishment. Well, the federal government got involved in that, but there are costs involved in having that electronic fee. Whether you have the hardware, whether you have the software, there's security breaches and things like that, and it's not the consumer that pays for that. But when the federal government got in and basically cut the price in half, those fees then are taken over by the consumer, because the credit union, the bank, have to find some way to provide that operational cost.
That's Jeff Olson, Vice President for Advocacy for the Credit Union Association of the Dakotas. And we're also talking tonight with Representative Jim Schmidt of Mandan and Representative Mark Owens of Grand Forks. Thank you, gentlemen. We'll see you in a moment. In our second half hour, sponsored by the Credit Union Association of the Dakotas, we have Jeff Olson, the Vice President for Advocacy for the Credit Union Association of the Dakotas. We also have Senator Tim Mathern, a Democrat from Fargo. Senator Mathern has been he's one of the more senior members of the legislature, although in terms of his service in the legislature, he certainly doesn't look it.
Not at all.
He is a former Democratic candidate for governor, a former committee chairman in the days, and these days did exist, my friends, when Democrats had control of the North Dakota Senate. So this sort of thing does happen.
Certainly does.
And it'll
happen again, Dale.
It's kind of easy to forget in the days in which we live.
When I moved here, that was the case.
Yes, it's true. 80s. And when I moved here, that was actually, it was shortly after I moved here. Maybe I should take some credit for it. There was a division in the legislature. The House was controlled by Republicans, the Senate by Democrats, and the governor was a Democrat. And, this sounds like something very unusual today, but in North Dakota. But this did happen, and everyone knows that the wheel does turn. Senator Mathern, we were talking earlier about the state of credit unions in North Dakota as it relates to, I didn't catch the whole conversation, but it had to do with whether
history.
There was the history of the establishment of a.
You haven't been around that long, but
there was a cardinal. First of all, he was bishop. He came from Wisconsin. Aloysius Minch had a degree in economics from the University of Madison, Wisconsin. He was appointed bishop in Fargo back in the 30s, and after he came here, he did a lot of work in getting credit unions started. He essentially was a German who had an economics education, so his grandparents had come from Germany. Most of this credit union stuff started from Otto von Bismarck in Germany. Well, anyway, this bishop came to this diocese, started credit unions around the country, and I wouldn't doubt that we have state-chartered credit unions in North Dakota and not in South Dakota, because Cardinal Aloysius Minch was in North Dakota and not in South Dakota.
I'll buy that story.
But I got a better story about credit unions.
But first of all, is Cardinal Aloysius Minch the gentleman who began the school in Fargo?
The school in Fargo was named after him.
Okay.
He certainly had the intent. Cardinal Aloysius Minch was assigned by the Pope to be his representative to help clean up what was going on in Europe after the Second World War. And so he went to Europe and worked on developing those countries. But in his legacy, the seminary in Fargo was established, and so that's a wonderful history. But we got a nice story about...
Let's hear this nice story.
There was one...
Ladies and gentlemen.
Well, we should first preface this too, that Senator Mathen, and I specifically sought him out to be on the show because he has a terrific credit union story, but... he's another one where we were out and about and we had the opportunity to talk, and he had a great story, and we appreciate you. I know it's a long day for you sticking around and
sure.
Being a part of the show. So thank you, Senator. You are originally from Edgeley, North Dakota.
Originally from Edgeley, North Dakota, Jeff. Thanks. And when I was 10 years old, I bought eggs from my neighbor for 3 cents an egg. They were duck eggs. And I hatched the duck eggs under a chicken cluck and got little ducklings, and the ducklings grew up, and they were my pets. And my mom and dad said, Tim, you're going to have to butcher those ducks. We don't just raise animals around here for fun. We had 13 kids in the family, and so these ducks were raised, and we butchered them, and then I sold them to the neighbors. So I got my first money ever, and my dad, I still remember, told me I should get my money, and we're going to town. We went to town, and we went to the Edgeley Credit Union, which was a little room in the back of the local Farmers Union store, and there was Mrs. Isaacson, and she opened an account for me. Now, this is over 50 years ago.
How old were you then? I was going to ask.
I think I was 8 years old. And she opened an account for me. It was a little brown book. And she wrote in there, and I had $12. Put all my money in there, and it was from the ducks. So I've had a credit union account since that time. Basically, my father taught us that we could save, but also taught us we should save in a way that our neighbors in the community could benefit from that, so they could use my duck money. And that duck money was there until I went to college.
Wow.
And
what sort of interest did it draw? Do you remember?
Well, I'm not sure, but I would go into the credit union maybe once every 6 months or so, and Mrs. Isaacson would take my little brown book, and she'd scratch in a few more cents, and to show how much interest I got. And as far as I was concerned, it was big money. And I think there's a lot more things that the credit unions could do now that our state needs.
Such as?
Well, in Fargo, we have all of these people that are using payday loans. They're just getting robbed. High interest rates that they're paying to get a loan until their paycheck comes. To get a loan until
bridge loans or
to get a loan until somebody helps them out with something else, and they're paying exorbitant interest rates. We had to figure out a way to put payday loans out of business by putting services in place, and I think credit unions could do this. I think credit unions had this role at one time, and I think we need to reach back a little further and figure out how these really low-income people can get these short-term loans, and I think that's a role for credit unions.
You pick up a great point, Senator Mather, too, and I think I want to go back to a comment you said just a few minutes ago, and you talked about your father teaching you about money and finances and bringing you into the credit union. And sometimes we as a society, when we fail, to do that, we kind of look at the schools and the education component to take up where we fail at home sometimes. And the show next week really is going to be about financial literacy. So we're going to have some legislators in here talking about financial literacy.
Hey, we need to teach some of those legislators some financial literacy.
But it really does. If you look back, I think all of us here at the table could say, our parents taught us about some of this stuff, and we're missing some of that. And I know, and we have statistics that'll prove it, that we're in this position we are as a country because people aren't paying attention to that basic stuff, that basic financial basic financial education?
Well, basically, even our history in the past 5 years demonstrates, the value of credit unions. When we went through all that financial crisis, and the big banks were tanking out, our credit unions were doing fine. They were closer connected to local folks making local decisions, and they weren't going overboard.
Your father, back when he took you to the credit union, did he explain to you what he liked about a credit union as opposed to, another type of financial institution?
Well, to tell you the truth, he did. He said to me that as a lower income farmer, he couldn't get a bank loan. He could not get a bank loan. And in Edgerly, North Dakota, he had a section of land, he had 13 children, and the bank thought he wasn't a good risk. He got loans from the credit union to buy a co-op tractor, to buy this, to buy that, and he explained that to me. And frankly, he was a successful farmer. He raised 13 kids. They all went to school. They're all wonderful citizens in our state, in our country, and he was a great risk, but he could not get a loan from the local bank.
Did you ever borrow money as a young man from the credit union?
When I went to college, I got my first loan from the credit union. I never borrowed any money before I went to college, but when I went to college, I borrowed money from the credit union. My folks basically didn't have money to put into college, but I borrowed from the credit union, so I did. Later, though, I must tell you the truth that my dad kicked in some payments later in life.
Oh, really?
When he had a few dollars. That credit union loan was going down faster than my payments. I said, hey, what's going on here? Well,
did you figure this is another part of the miracle of credit union?
Yeah, right. And they said my dad showed up every once in a while with a little check and put a payment on it.
Okay. So this wasn't just the magic of wasn't the magic fairy dust of credit unions. Okay.
Yeah.
How have you ever tried to or wanted to serve as a director of a credit union?
I have, but I just haven't taken the time to do it. I serve on a number of boards of nonprofit organizations, and I just haven't done that. The credit union that I'm a part of, Town and Country Credit Union, I'm a member and have been. Well, I've been a credit union member all my life, and the time I spend generally is on a lot of nonprofit boards. But I am now starting. I'm the president of the cooperative to start a food co-op, and we're aligning ourselves, and we have our money with the local credit union, and so that's as close as I've gotten to the board. So maybe that's another thing I'll do in life. Get on the board of a credit union someday.
Well, I imagine that if you go into the annual meeting and tell the story about your ducks and the $12 and the small brown book, I think that you might win in a landslide.
Hey, that's a great thing to do. I have a tough sledding in some of my elections. Sometimes they're really close, and maybe that would be one I could really move up there easier.
I'd like to back up a little bit too. You made some really good points earlier, Senator, about these alternatives, the financial alternatives out there, the payday lenders, the bridge loans companies. What would you see as a solution that you as a legislative body could do and take the leadership role in helping people? Because what we see, and we do have credit unions who provide alternatives to that, is these people just get in these ugly cycles, and they just can't get out of these cycles, and it's just they just continue, and by the end of 6-8 months, they have paid hundreds and thousands of dollars in interest that they could have been putting back into their household for more, more purposeful things.
Well, I appreciate what you're doing in terms of financial education, because that really is the case. We have, unfortunately, so many parents that are no longer teaching their children about this whole area of finance. So we need to do that. We need to support some of that education funding through the legislature. But I think maybe the time has come when we should directly provide some sort of incentive for financial institutions, for credit unions to take a greater risk. I think credit unions are basically saying, we can't risk what it takes for those people who use payday loans. It's a short-term loan, and I think we ought to do something as a legislature to help credit unions take that risk and to get these people off of that cycle. They get into the cycle and they do it every month, and it's a matter of education, but also a matter of getting them an alternative and helping credit unions do that.
These people, you're absolutely right. These people, in some terms are being called the unbanked. I believe you do have to have a checking account to get one of those loans. I am not sure, but I think you do. But because of what's happened in the last several years in the economic crisis, the banks, regular banks, and I'll put credit unions in there, we're making money off some of these people because you didn't have to have a minimum checking account balance. NFS checks they were covering them, but they would fee you, to a point where you were almost paying that kind of interest rates anyway. And now, as the Dodd-Frank came out and they started regulating some of that, and we have the new Consumer Financial Protection Bureau, and they're taking a look at overdraft fees and stuff like that, the banks now have dropped these people. We don't want your business. We can't make money off you. And that's the key word with credit unions and banks. And it's not that profit's a bad thing, and I think I should clarify this, Representative Owens called us nonprofit. Well, that's not totally true. We're not for profit, and there's a difference between nonprofit and not for profit. So,
can you explain that difference, Joe?
Well, really, a nonprofit is more of you would consider a charitable organization, whether it's your church or the autism group that was on earlier. You want to give money to that autism group so they can go out and do research and do good, and you would get a benefit to helping that group out as a tax deduction or a tax shelter and so forth. A not-for-profit is we're mandated by the federal government that we have to have some profit. We have to make money off retained earnings. A credit union that's sound has a 7% net ratio. And so we have to return that money back to our members in the form of lower fees, and we have to make more investments in other loans and get that money out. So we do have to make a profit, and we just return it back to our members in different forms.
Tim, have you given any thought to how this might take place, this assistance that you mentioned, or the possibility of it, that the legislature could extend to credit unions for the benefit of people who are now paying rather high interest rates and getting payday loans to scrape by?
Well, I've thought of one of the things we've done is provided some resources to Extension Service. North Dakota State University and the Extension Service under Family Life Education Departments has been doing some education for young people about finances. So that's one thing that's important. But an actual bill to address the credit union thing, I've never worked on one. We've had some conversations about it, and the credit unions have told me they would have to cover this risk. So I think in some way we'd have to create a method wherein they could have a pool of resources, maybe through the Bank of North Dakota, that would offer a higher ability to take a risk. And frankly, the Bank of North Dakota is really supposed to be a service center. It's not supposed to be a profit center for the state of North Dakota. It's become a profit center. And we could take some of those resources and extend a greater risk to credit unions through the bank so they could offer those loans.
Jeff, can you try to, I don't know to what extent there are parallels that can be drawn, but can you draw any parallels between how a credit union runs and how the Bank of North Dakota runs?
Well, the Bank of North Dakota is a unique animal, and as you know, it's a state-owned bank, and it goes back to 1919. And I just read an interesting internet article on it today, that it is doing so well, and it's the talk of the country. And there are other legislatures around the country looking at that model, going, how can we copy that? How can we take that and emulate it in our state? And there's a couple of things that really would make it difficult, and that would be just mandating public funds going to one institution. So then you go to other states, you're taking money out of commercial for-profit institutions. And credit unions can take public money in some forms as well. So then you're going to have the bank lobby fight it tooth and nail and try to kill the bill before it even gets out of committee. The other thing, it's self-insured. It's not backed by the federal government. It's backed by the state of North Dakota and the taxpayers of North Dakota. We have we have them on our backs if something were to happen. And so, we have to look at the legislature and in the leadership that we've had and the leadership over the bank over the last 100 years and say they've done a great job. They've really have set it up, and they work partnership and in tandem with credit unions and banks. And the bills that I watched today, a lot of them are involving the Bank of North Dakota, and they're going to originate mortgage loans in rural areas where you can't get that, and looking at affordable housing tax credits because we have affordable housing issues across the state, so that they are serving the purpose and helping out the taxpayers in a lot of ways. And it's a unique model. I don't know, and I think that you've done stories on it that have gone national. I don't know that this model could work in today's environment anywhere else.
Hey, Dale, we got this great economy in North Dakota. Hey, some people say it's because of great management. Maybe it's because we got a bank in North Dakota. We started that baby in 1919, and all is well since then.
It's true. It's true. I actually asked that question of Eric Hardmeyer once. Eric Hardmeyer is the president of the Bank of North Dakota. And the question was, well, Eric, is it true that the Bank of North Dakota, by its existence, by its health, its profitability, its ability to recycle profits to the taxpayers of North Dakota, its ability to carry student loans, its ability to extend favorable credit to people who've been flooded out, people who are looking to buy a farm, people who are looking to get diesel truck driver training at one point.
Sure.
Can you take credit for North Dakota's prosperity? And Eric said, well, yes, we'd like to. I think that we're part of it, but is it all on our shoulders? Well, no. I think,
Sure.
In fact, a great deal of it is on the shoulders of the poor dinosaurs that died millions of years ago and are now yielding up their bounty to us for our own edification.
It's interesting. We've had these crises over the past decade, and we have used the Bank of North Dakota to write the big checks.
Yes.
So when the disaster check is in the mail from the federal government and takes weeks and weeks or maybe months, we write that check out from the Bank of North Dakota. That local community can get right to work.
When I moved to North Dakota, I was fascinated by the idea of a state-owned flour mill, a state-owned bank, and the fact that you could not buy a shirt on Sundays.
Uh-huh.
And there was you could gamble in the bars on Saturday night, but you could not buy a shirt on Sunday. And you couldn't go to the grocery store either because they weren't open.
Well, you could, but the grocery stores were open but they were roped. Things were roped off.
Well, no, that wasn't true.
That was later.
That was later. That was later because back then I thought, you can't go to the grocery store, but you can gamble the night before. I thought that was very interesting, and also you have these blood red socialist institutions in North Dakota. I thought that was really interesting, and the Bank of North Dakota is. The more you learn about it, really, I think, the more interesting it becomes, and you really do think if everyone was starting from scratch, would all states have something like that? Because it isn't. It's a really a very efficient way of handling public funds.
It's very much of a clearinghouse too for all of the financial institutions.
Yes, it is.
So they all benefit some way by having sort of a neutral clearinghouse for financial transactions.
And you have situations which really in other contexts would sound bizarre. You have the banking industry going to the Bank of North Dakota and saying, will you please make mortgage loans in rural areas because we can't handle it, or there's too many rules, we can't deal with it, and giving away their own business to a state-owned bank.
Well, there's a great example where credit unions and banks can originate these loans or do the paperwork, service the loans,
yes,
and then the Bank of North Dakota would be the holder. So, I mean, it's a great partnership.
We've been speaking tonight to Senator Tim Mathern, who had a great story about how he joined a credit union with his duck earnings as a young man. And It's Jeff Olson, who's the Vice President for Advocacy for the Credit Union Association of North Dakota. Thank you, gentlemen.
Thanks, Dale.
Thank you very much.
That's it for the legislature today. We will see you tomorrow night.